Good morning, everyone. Happy Monday, and welcome to the Daily Trader with Kevin Hincks, a show where we put on practice trades. Before we get to our macro minute, today's macro minute's actually going to be our Nvidia minute as we focus on them and their earnings after Wednesday's close. Nvidia actually traded as low as 137.15 this morning. Now, as we hit the 10 o'clock hour in Chicago, it's trading back over 140. The news out this morning, the Blackwell GPUs, are overheating when connected with custom server tracks. Nvidia has reached out to some suppliers and asked them to tweak the design of some of their servers for the Blackwell several times in recent months. Remember, the Blackwell chip has already been slightly delayed with some tweaks, but Nvidia has not notified any customer of delivery delays in the Blackwell chips, but concerns have been raised. So that's the news on Nvidia this morning as we get ready for their earnings coming out Wednesday after the close. That's our macro minute. Now let's get to our trades for today. The first one we're going to look at, Tesla. Now Tesla, as you know, also has news out today because Tesla and the Trump administration are accelerating the acceptance of full self-driving, or working on the acceleration of full self-driving. As you know right now that there's strict government regulations surrounding no driving, no steering wheel in the car, and no gas pedal and brake pedal, and all these things. Well, Elon Musk, working with the administration, they're working as a priority with the Department of Transportation to look into that and accelerate that process. So, as you can see, Tesla now, as we sit at the 10 o'clock hour, trading $344, up $23 on the day. Traded as high as $348 today so far this morning. So Tesla up over $20 as we get to the 10 o'clock hour. The practice trade that we're looking at here for Tesla is something that gives you the opportunity in case Tesla were to move higher or lower. Remember, this is a paper money trade that we're looking at here, which gives you the opportunity to be profitable in either direction and taking advantage of the dispersion between the front expiration in Tesla and the second expiration in Tesla. It's currently, the front expiration implied volatility is currently sitting at around 84. The November 29th expiration, 11 days out, currently sitting around $22. So, looking at a practice trade here, we looked at the double calendar trade. Now that is where we bought the 365 call calendar, the 1 week, November 29th to November 22nd, as the same time buying the November 29th, November 22nd, 325 put calendar. And you could see that profit graph there that gives you two peaks, not one. Both of them at the short strikes, the 365 on the upside, the 325 on the downside. This paper money trade is currently trading around $7.35. We've got it up there at $7.20. That was put in a little early. It's moved a little higher here, and it's doing all the things that we like about the calendar spread, right? You're buying longer term options, selling shorter term. Therefore, you are collecting theta on a daily basis. The risk defined to the debit paid. It allows you to extend duration into the November 29th expiration and gives you a longer time frame for this trade. And it gives you options, right? As it moves towards, hopefully, a $20 move in either direction. Now, currently, the expected move for that time is $24.90, roughly $25. Traders like to round, so we'll give it a $25 trade. So you're inside the expected move in either direction. And now the risk on this trade is a catastrophic move outside the range in either direction, as you can see, or no movement. If it were to stay inside the range of 325 or 365, it would stay around here where it is, 345. That would also hurt this trade. Okay, so the risk on that trade is the debit paid, and your goal on this paper money trade is to go towards the short strikes. All right, that's our trade in Tesla. Now the second one, Apple. Now Apple's a little different story. The paper money trade we're looking at here is something in a more cautionary tale. Why? Well, if you read about Apple, its fundamental analysis is currently working against Apple. The PE ratio, the price to sales ratio, all historically high. The technical analysis, the Bollinger Bands, the MACD, the RSI failing at peaks is all working against Apple. Warren Buffett is selling Apple stock. That is another cautionary tale about Apple. The 37.5 PE is historically high. So all these things doesn't mean Apple's going down, but our practice trade is illustrating that it's protection, which means the current price of Apple, $228, just under $229. We are selling the November 29th, so we went out a little over a week, and we sold the 232.5 strike call, and then we bought the 237.5 strike call. Now, we put this in around 80 cents credit. It's now trading about $1.05 credit because the stock has moved higher. That gives you two choices. You can change your strike price, or you can collect more premium on this trade. Remember, the risk on this trade is the difference between the width of the strikes, $5, and the credit received, which in this case, we have 80 cent credits now trading about $1.05 credit. So these are paper money trades that are practice trades that we're gonna show you here. In case you have, let's say, long stock in Apple. Maybe you own Apple long term, don't want to have a tax event. This is a way to play the other side. It gives you about 19 short deltas in Apple, and it's a more passive short delta, which means Apple could move higher and you could still be profitable on this trade because remember, you're short the 232.5 strike. So the stock could move higher even through $230 and you could still be profitable. So two practice trades today, two paper money trades, a double calendar in Tesla, and a short call vertical in Apple. The call spread in Apple collecting theta, risk defined, and high probability. All right, that's our show for today, everyone. Thank you so much for joining in for Daily Trader. I'm Kevin Hincks. We'll see you tomorrow with another edition of Daily Trader.